Good morning, Facebook. We're live. We are live on a Tuesday morning. A bit dreary today. I've just been out with the dogs. Very rainy. Typical British summer's day, I suppose. So I hope you all had a good weekend. Let's get into today's subject. So today we're talking about what is the best indicator in Forex trading. So what is the best indicator? Now, the reason I'm bringing this up is because last night in our trading room, one of the guys that was there asked the question, what I do on a Monday night is I do a teaching session for about an hour, and last night we focused on price momentum. But prior to that, I'm coaching and I'm helping and I'm going through our live trades and I'm working with the guys very closely in there. And one of the guys asked me, he said, what are your thoughts on ATR? Now, those of you that don't know what ATR is, ATR stands for average true range. And it's essentially an indicator. Now, in terms of indicators, it's quite a simplistic indicator. It's quite an easy one in terms of its formula. It's simply looking at a series of candle bars and it is telling you the average range over a designated amount of them. So if you had the ATR indicator set to 14, it would measure the average range difference from the high and the low, and it would take the average of the last 14 bars. Now, the question was, what are my thoughts on it? What do I think about it? And what it's done is it's made me think about all the times that I've been asked about what the best indicator is. Now, the great thing about that question that I got in the room is it's much more strategic and it's coming from more of an optimization or implementation point of view rather than simply asking the question, which is, well, just what's the best indicator? So the challenge with asking that question is it brings up a load of issues. The first one is simply there's no such thing as a best indicator. So a lot of the time people will say this indicator is better than this one, or don't use this indicator, use this one, or price is better than indicators. Now, if someone said to me, Ali, you've got to choose an indicator like MACD, ATR, RSI, or a price-based study or indicator like Fibonacci moving average, something along those lines where it's on the price area, I'm going to pick one that's price-based over one that is below what we call the price area. So I'm always going to pick something like a moving average over a ATR or a MACD because I can apply that specifically to the price action. But again, the challenge there is, for me, I'm always going to prioritize price action over an indicator. So the challenge with asking what's the best indicator is the risk is you are already dismissing price action, studies there, candle patterns, all the things that are probably going to be more relevant to you in terms of either your discretionary analysis or what are going to make up the core components. So that's my first issue with the term best, is you're already psychologically potentially dismissing a load of other things. So for me, I think that's the main issue. The second thing is when people are comparing one indicator to the next. And the other issue with asking the best is very few traders have taken every single indicator and cross-referenced and tested them in 10 years worth of market conditions to determine which one is the best. So anyone that tells you and says, oh, this indicator is definitely better than this indicator, it might be for the 3 years that they've traded it and all the data they have, and best might be that they've compared that indicator to 2 or 3 others. It's very similar to saying what's the best strategy. There isn't one. So I think this term best is one that I like to get out of trading. It's very, very risky in terms of how you think, and it gets you also into the mindset of thinking short term. So if something then doesn't work for a week or a month, it's easy for you to go, well, this can't be the best. But your determination or your idea of what best is can be very different to somebody else's. So for me, this whole term of what's the best indicator needs to be pushed aside. And I think then what it does is it allows the trader to look at the concepts of indicators in the right way. Because yes, you can use indicators. Do I use indicators on some of my strategies? Yes. Why do I use indicators on some of my strategies? Because I've implemented them as part of the process, and as a result of implementing them, I'm able to get a better result on my strategy. Is it the defining factor that makes up my strategy? Absolutely not. Because when we piece everything together, and this is essentially the 4 pillars of trading that I talk about over and over and over again, is we start with your discretionary price analysis, your ability to look at the overall market position. Then you look at your relevant strategy. Then you look at risk management and mindset and data. So these are the pillars that we work on. Now for me, indicators tend to come in as a tiny part of the secondary factor there, which is the strategy. So for me, if I'm doing my overall market analysis and I'm looking at 20 markets and I'm looking to establish which ones are at key areas to either trade with the trend or against the trend, indicators have nothing to do with me determining that point. Indicators will only potentially come in when I'm then actually looking for the very, very specific strategy criteria. So it might be that price has to bounce off a 21 moving average and close in the direction that I want to trade. Someone says, well, why do you do that? Well, because that's where I started, that's where I tested, and that's what I've optimized, and that's what works. So the indicator or price study in that particular moment makes up a small element of the entire strategy, and the strategy is only part of the overall process. And I think this is where so many people go wrong, is they make the indicator too big an element of the entire process. And this is exactly what we teach on our Kickstart. So when you come on our Kickstart training, it's 28 days, it's with myself, it's with Kerry, and we work with you very, very closely. We get you going away and applying the things that we use. And for a lot of the guys that come on that course, the first thing they are taken aback is that we don't spend any time on indicators for that entire 28 days, because that only comes after you've mastered the skills of price analysis, risk management, and key elements of putting a strategy together. So that's the level of significance that we put on it. We don't say that you shouldn't use them, but what's more important is the context and where they fit in. And interestingly enough, last night, what was really fascinating is one of the guys that was in the room, he actually uses ATR. So the question came from somebody else and we had a discussion about it, but actually one of the other guys that was there, Matt, he uses ATR, but he uses it as probably one element out of 5 within his strategy. So it's not the defining factor. So he's not sitting there saying it's the best indicator, he's not relying on it, and he's not prioritizing it. So I think with indicators, that's the key thing. Don't think about it being the best, don't rely on it, and don't prioritize it, and don't rely on it. So they're really, really important. So it only made up a small amount of what he does. So to summarize, I think it's really important to make your primary focus price. A lot of traders don't do this because this is where the hard work is. This is where learning your craft comes in. And this is where it's key then to determine what strategy you trade in what market condition. Whereas 2 moving averages crossing or 2 lines crossing is a much easier process for a trader to do. So I think that's why indicators can often be pushed to the front of the list. Second, make sure the indicator fits the context of what you're doing. So as I've said, have an overall price analysis perspective, make sure you do that. Then you have a strategy that fits that market condition, and the indicator is in context. It only makes up a small amount of that. One thing I haven't spoken about, really important thing, is don't use too many indicators. I've often worked with traders, they come to my trading room, they're sat here and they're showing me what they trade. They're on a one-on-one session with me. And one of the common themes is their charts are too busy. They have too many indicators, too many studies, because the other myth is the more studies I use, the more indicators I use, the higher the probability of success. It's an interesting, almost subconscious thought process that people have. If it's more complex or there's more of it, then it's going to work better or I'm somehow safer. And this is not often the case. In fact, too many indicators can mean making a decision to place a trade can be very difficult. So yeah, focus on price, make sure you have the right context, don't have too many indicators and don't rely on them. And if you want to know how we piece our key 4 pillars together and actually do that, and you want to know more about our last Kickstart program, we're only doing one more 28 Kickstart program for 2020. All you need to do is DM us here at Trader Support Club. Just put 28 in the subject and we will send you the details. We've got a couple of places left. Send us an email at support@tradersupportclub.com and just put in the title 28 and one of the team will get you the details. All right. So I hope you found that useful and I'll be back in touch with you again very soon.